Hello students, today I am going to solve question number 2 of page 174 of retirement of partner. It's a solved problem as gain ratio is asked here. So it's a problem in which we will learn how to calculate the gain ratio. Okay, so see, first I will read out the problem. Following is the balance sheet of the firm of Nana, Nani and Sona who share profit and losses in the ratio of their capital. See, balance sheet is given. Then Sona retires from business on 1st April 2019 and the following adjustment were agreed. So see, first one, stock is to be valued at 92% of its book value. So we will put a tick mark on stock. Then RDD is to be maintained at 10% of debtors. So we will put a tick mark on debtors. The value of building is to be appreciated by 20%, so we put a tick mark on building. Goodwill of the firm is to be valued at 12,000. Sona share in the same to be adjusted in the accounts of continuing partners in gain ratio. So only retiring partner share has to be raised. Now see the next adjustment. The entire capital of the new firm be fixed at rupees 1,60,000 between Nana and Nani in the new profit sharing ratio, which is fixed at 3:1, making adjustment in cash. So this is nothing but new ratio is given to you, and like in admission we have done, the partner's capital account balance has to be adjusted as per new ratio. So this will be the capital between Nana and Nani. Then amount payable to Sona paid in cash. So Sona is retiring. Sona is the third partner, right? Balance in her amount will be paid in cash. It is not to be transferred to the loan account. So they have asked you to prepare the revaluation account, partners capital account and balance sheet. Okay, so first we will start with the posting. So see, first we will do the asset side posting. So this is my revaluation account, partners capital account and balance sheet. Now for posting, see, first we will do the asset side posting. First is machinery. As there is no adjustment, I will write in the outer column. Next is building. There is an adjustment in building, so we will write in the inner column. Next is stock, right? Again, stock has an adjustment, so we'll write in the inner column. Next is debtors. So again, debtors will be written here. Inner column 12,000, there is an adjustment. Now see, next is what? Cash. As we can see, there are two adjustments relating to cash, 5th and 6th. This has to be done in cash. So I will open a cash account in working note and the opening balance will be written in the debit side. To balance brought down 17,000. Okay, now coming to the liability side. See, liability side, opening balances of partners are given 50,000, 20,000, 30,000. More of they have shown that their profit sharing ratio is in the ratio of their capital. So 5:2:3 is their old ratio, right? उनके capital में ratio लेने बोला है profit sharing ratio. So 5:2:3. So we will do the posting of opening balances in partners capital account. Credit side, by balance brought down 50,000, 20,000 and 30,000. Okay, now see the next, there are two liabilities, creditors and bills payable, 10,000 and 5,000. There are no adjustment, so directly we can write in the outer column amount, creditors 10,000 and bills payable 5,000, right? So we have done with the posting. Now I will start with the adjustment. See, the first adjustment is stock is to be valued at 92% of the book value. So in my working notes, first one, stock. Now stock is how much? Stock is 12,000. So they want it to revalue at 92% book value, right? So two zeros and two zeros cancel. So when I will multiply 120 into 92, so I will get the amount as 11,040. So 12,000 minus 11,040. So the difference amount is 960. So we have to give the effect for 960, right? Because usko 92% value करने बोला है, so that is what 8% has been less. Even you can do it like this, 12,000 into 8 upon 100. Okay, so 960 has been reduced. So when your asset reduces, it's a loss. So it will come in revaluation account debit side to stock account 960, and secondly it will be deducted in your balance sheet less reduction 960. So outer column it will be 11,040. Now see the next adjustment. RDD is to be maintained at 10% on debtors. So see here, my second working note, debtors are 12,000, right? So 12,000 के ऊपर 10% is how much? 1,200. Now already the RDD is how much in your balance sheet? 1,000. So 1,200 minus 1,000 means you have to create more RDD for rupees 200. So RDD is increasing, so that is a loss. So it will come in revaluation account debit side to RDD account 200, and moreover in debtors now we will deduct less RDD 1,200. So outer column it will be 10,800. Now see the next adjustment. Next adjustment, the value of building is to be appreciated by 20%. So in my working note, see the building, amount of building is 55,000, right? It has to be appreciated by 20%. So when I will calculate 20% amount, it will come to 11,000, right? Two zeros cancel, 55 into 2 is 110 and 20, right? So 11,000 it has been increased, right? So when an asset increases, it's my profit. So it will come in revaluation account credit side by building account 11,000, and secondly it will be added in the balance sheet, add appreciation 11,000. So in outer column it will come as 66,000. Okay. Next adjustment, the goodwill of the firm to be fixed at 12,000. Sona's share same be adjusted in the accounts of continuing partner in gain ratio. So now Sona's share is to be calculated first of all. So 12,000 is the goodwill, right? So goodwill is 12,000. Sona's share will be how much? 12,000 into, see here the ratio where Sona is the third partner, so 3 upon 10, right? So 1010 cancel, 12 threes are 36 and 2 zeros. So 3,600 is the Sona's share. Now this has to be adjusted in the accounts of continuing partner, means you have raised 3,600, right? And then you have to adjust it in the continuing partners account. So that means what? You have to raise and write off the goodwill. Raised and write off, right? They have not directly said it, but it means the same. But you have to write off it in gain ratio. Okay. So now in for gain ratio, we will first calculate the gain ratio. Gain ratio is new ratio minus old ratio, right? So the old ratio was 5:2:3 and new ratio is 3:1. It's already given in your adjustment, right? So now gain ratio will be for whom? Continuing partner. That is what? Nana and Nani, because Sona is retiring. So Nana, Nani. So new ratio for Nana is 3 upon 4 minus old ratio is 5 upon 10. Moreover for Nani it will be 1 upon 4 minus 2 upon 10. So for Nana, when I will make the denominator same, it will be 40, 3 tens are 30, 4 fives are 20. So it will come 10 upon 40. And for Nani, when I will make the denominator same, it will be 10 fours are 40. Here 10, 4 twos are 8. So it will come 2 upon 40. So as the denominators are same, I can write that gain ratio is equals to 10:2, right? 40 40 है दोनों का denominator. So it will be 5:1, right? So gain ratio comes to 5:1. So that means what? This 3600 has to be distributed into 5:1. 5:1 means what? 6, right? So it will come 600. 6 ones are 6 6 are 36. So 600. So for Nana, 600 into 5. So 600 into 5 means what? 3000. And for Nani, it will be 600. Right? Now we will pass two entries for this. So for this, there will be two adjustment. One for raising of goodwill. So that will be goodwill account debit to Sona's capital account. Right? And the second entry will be Nana's capital account debit, Nani's capital account debit to goodwill account. Now you can see that goodwill gets cancelled. Goodwill is debit here, goodwill is credit here. So it will get cancelled. Right? So if you have made a goodwill account in the rough work also, then there will be no balance in goodwill account. So C4 will come here by goodwill account in Sona's column 3600, and for second entry it will come here to goodwill account 3600. Right? Now the next adjustment. The entire capital of the new firm to be fixed at 1,60,000 between Nana and Nani in the new profit sharing ratio, which is fixed at 3:1, making adjustment in cash. Now what they want is, see, now they want this entire capital of the new firm. So in new firm, as Sona is retiring, so there are only two partners, Nana and Nani. So they want this 1,60,000 into 3:1. So see, 1,60,000 is the capital of the firm. They want it to be in 3:1 ratio, that is Nana 3 and Nani 1. Right? So that means 3:1 means what? 3 plus 1, 4. So 4 ones are 4, 4 fours are 16. Right? So it came here 40,000. So for Nana, 40,000 into 3 is what? 1,20,000. For Nani, it will be 40,000. So they want this as capital account balance in new ratio. We have done this in admission also. Right? So here in partners capital account, they want this balance to be carried down as 1,20,000 and 40,000, right? And whichever is the whatever will be the balance now there in partners capital account, they want to adjust it through in cash, right? So we have done with this adjustment. Now one more thing, here it will come as capital in balance sheet liability, Nana and Nani. This is the closing balance. So it will come here 1,20,000 and 40,000 means outer column 1,60,000. Right? So see the last adjustment, that amount payable to Sona paid in cash. So that for that we have to close the partners capital account. So we have done with all the adjustment. Now we will close the revaluation account first. So credit side total is 11,000. So from 11,000, when I will deduct 1160, so I will get a balance of 9,840. This is nothing but profit. So to partners capital account in bracket profit, and this will be distributed among all the three partners, Nana, Nani and Sona, and the ratio was 5:2:3. 3, right? So when 9840 is divided by 10, right, I get 984. So for Nana it will be into 5, for Nani it will be into 2, and for Sona it will be into 3. So when I calculate this, Nana amount is 4920, Nani will be 1968, and Sona will be 2952. Okay, so this I will write in the inner column: 4920, 1968, 2952. Now it is in the debit side, so it will be transferred to the credit side of partner's capital account by revaluation account, and the amount is 4920, 1968, 2952. Okay, now we will close the partner's capital account. So when we will close the partner's capital account, first we will close Sona's column. So the amount here is 36,552, right? So 36,552. Now Sona is retiring, right? And they want this to be paid in cash. So nothing is to be deducted in the debit side. So this will be to cash account, right? This was Sona's balancing फिगर, राइट. देखो क्या एंट्री होती है, सोनास कैपिटल अकाउंट डेबिट टू कैश अकाउंट, यानी बिजनेस में से कैश जा रहा है. अब ये सोना के कैपिटल में डेबिट में मीन्स कैश में आएगा क्रेडिट में बाय सोनास कैपिटल अकाउंट, एंड द अमाउंट इज 36,552, right? Now we will close the other two partners capital account. So as we can see here, this side total is more, so 1,23,000 and 40,600, right? So same I will write the total here, 1,23,000 and 40,600. Both the side I have written the total. Now I will get the balance here. So this will again be by cash, because as they have told, you have to adjust in cash, right? So from this 1,23,000, when I will deduct 54,920, I will get a balance of 68,080, right? And from 40,600, when I will deduct 21,968, I will get a balance of 18,632, right? So here it is in the credit side. So in cash account, I will write in the debit side to Nana's capital account 68,080, to Nani's capital account 18,632. Now we can close the cash account. So see here, 2, 8 and 3, 11, carry 1, 7, 8 and 8, 16, 16 and 7 is 23. So 2 carry 6, 7, 8, 9, 10. So 1,03,712. From this, when we will deduct 36,552, we will get a balance of 67,160. So by balance carried down 67,160. Now this balance will be transferred to the balance sheet. So in my balance sheet asset side, I will write cash 67,160, right? So we have closed all the accounts. Now we will tally the balance sheet, and my balance sheet will be tallied as 1,75,000 in the liability side. Same way, when I will total the asset side, it will amount to 1,75,000, right? So we have completed with the problem, right? So in this problem, the important thing is that they have, first of all, in retirement they have asked you to do this capital account adjustment and new ratio. Moreover, they have given you the new ratio in the problem, but then also they want this this adjustment of return off of goodwill to be done in the gain ratio. So you have to calculate the gain ratio, and in this problem even the amount is directly paid to the retiring partner. Okay, thank you.